economic ninja. I've been covering the bank failures ever since they started in 2023. Before that, I warned about them. And in 2023, I think most people did not realize how big of a deal it was. And then they really didn't care because the FDIC stepped in. But like I explained so many times before, the FDIC did the exact same thing in 2005, 2006, 2007, and in 2008, they let two companies go under. One was an investment house, purely Bear Stearns, and then they allowed actually many to fail, but the one that was really out there in the open was Lehman Brothers. Now, the reason why they did that was because they came to the breaking point of the FDIC. The breaking point of the FDIC was actually found out to be last July of 2023, 2 Julys ago, I'm sorry, when they said that they are completely insolvent and they had to actually force the Fed to force the largest banks to up the amount that they're paying for deposit insurance. Even the big banks at the time went to Congress whining and crying that they couldn't afford to pay the additional insurance for all the other banks. The Fed made it very clear the small and mid-tier banks don't have enough to survive. We witnessed in 2023 the greatest banking collapse since the Great Depression, and nobody really realized it happened. Well, just recently, a bank failed, and we've got bank failures starting again. And it was a small bank, and it was treated differently. And I want you to think how you have your bank set up. And hopefully you have many banks, not many branches, many different types of banks, many different bank companies, if you have a substantial amount of wealth. And it's going to change, I believe, in 2025. You know, there's never been really a president that's allowed big banks and big institutions to fail. I'm curious as to what happens this time when our nation is faced with another downturn in the economy, if President Trump will signal, well, we need to let the strongest be, the strongest companies survive, the ones that made good decisions, not bad decisions. It's going to be very interesting. The story's out of the Financial Times, and it's entitled, "A Tiny Oklahoma Bank Failure Reveals Doubled Standard in Depositor Bailouts." It's Christmas time. Also, I want to remind everybody as we're reading the story, the mid-filming discount is good for a handful of days more for Tax Lien Pro and Tax Foreclosure Master. If you want to learn how to buy properties this spring very inexpensively and get an incredible rate of return on your money between 8 and 36%, I'll teach you down below. All right, the link's down there. It says here, Lindsay, Oklahoma is 1,600 miles from Santa Clara, California. For some depositors of the First National Bank of Lindsay, that distance might feel like a couple worlds away. But the failure of First National, which collapsed a month ago and was acquired by nearby rival First Bank and Trust, means Lindsay and Santa Clara are twinned in a rather unusual way. As benefits U.S. bank failures, the First National Bank transfer to its new owner should be seamless for most customers. The exemption is those holding deposits in excess of $250,000, the limit that the Federal Deposit Insurance guarantees. Of about $10 million in assets at the bank, $7 million are uninsured and set to receive initially only 50 cents on the dollar. All right, so we are now witnessing, for the first time since the beginning of the 2023 banking collapse, we are seeing the first bank being told that if you did not have your accounts in FDIC insured accounts, you are only going to receive, or if you had an additional excess, let's say, because not all accounts in a bank are insurable. And all accounts that are insurable are only insured up to $250,000, right? This is the FDIC rules, not mine. They're now being told, we're only going to pay you out 50 cents on the dollar. And I'm going to tell you, I honestly believe that you're going to see more bank failures in the next 2 quarters, and you are going to see the same sort of layout, okay? Everyone that's, in the insured category, you're going to get your money back. The ones that are not, you're going to be paid 50 cents, 40 cents, 20 cents on the dollar. And it's going to get worse and worse because the FDIC is still strapped for cash. It says here, the amount could rise as First National Bank of Lindsay's assets are sold by the FDIC. A little short of 2 years ago, the US federal government famously invoked special authority to make all deposits whole of California's Silicon Valley Bank, as well as New York-based Signature Bank. The decree was intended to prevent a broader bank run amongst regional banks whose asset portfolio values were in peril by rapidly rising interest rates. Just so you know, we are not only in the same boat, we're in a worse boat today with regional banks, okay? So let me back up a little bit more here and remind you, it says here that the US federal government invoked special authority, okay? This is akin to how bad it was in 2008 when George Bush said, hey, we've got to do something, and the FDIC raised its limits because it used to be a lot less. I want to say it was $100,000 back then. So they changed, right? Because there was a crisis. In 2023, there was a massive, massive crisis. It says here, US bank failures occur erratically and are typically most prevalent among smaller banks. Now, let me show you this chart right here, and this is very important. Excuse me. This is 2008. This is 2023. This is a big deal. And just so you know, when it started, it spiked, and then you had less failures, less failures. I believe that this is actually only the beginning, and the next year is going to spike. 2025 will actually be larger than this. The only reason we had so few banks fail in 2024 is because it was an election year, and the federal government has been printing money like you wouldn't believe to keep these regional banks from having to call back some of their loans. I personally know people that work in high positions at a handful of regional banks in the country, and they're coming back and letting me know, look, we have such a book of loans that people are not paying on, right? We want to be able to foreclose on these. We are being told you can't do that. If you do it and you recognize a loss, it hits the news stream, it hits Wall Street, and then people start to panic. This is exactly what happened in 2023. So I want you to realize you're going to see this big spike that we already experienced, nothing in 2024 because of election year. And I believe in 2025, you're going to see a massive, massive spike. And there are certain people that want this to happen because, you know why? People are going to be able to blame Donald Trump. They're going to be able to blame you for voting for him. And there are a lot of people that will actually believe that narrative. Type 1 if you agree with that. There are a lot of people that would actually buy that, even though you and I know that that's actually not the case. Now, it says here, Rohit Chopra, the head of the U.S. Consumer Financial Protection Bureau, earlier this week lamented on social media that larger banks like Silicon Valley Bank, with its elite and well-connected customer base, seem to get a better deal than tiny First National Bank of Lindsay. To be clear, the shareholders of Silicon Valley Bank were zeroed out, and its management all lost their jobs. Okay, that is not being clear at all. The author is a nutball, okay? There is a massive difference between the depositors being made whole and they at Silicon Valley Bank, and they were not made whole, all depositors at Lindsay Bank, the small bank, and the author saying, to be clear, the shareholders of the bank were zeroed out. That's what always happens, always. We're talking about the fact that not all depositors were made whole, okay? So this is what I want you to think about. I believe that this banking crisis is going to get worse. If you agree with that, type 2. I'm just curious. If you think, no, it's not going to get worse, type 3. I'm curious how many people think we're out of the woods. Here's my point. This has never been a better time to go, you know what? If I've got, a couple $100,000, why not just, or let's say a couple $100,000 over the FDIC limit, why not just split it up? And here's the other thing. For people that have less money, if you've got less than that, which there's nothing wrong with that. We all start somewhere, right? Why wouldn't you just have two banks, two different banks? Hey, I do all this business out of this one. I do all this business out of that one, because what if all of a sudden there's a computer hack on one of the banks, you can't get money? That's happened to me multiple times this year. As a matter of fact, it's happened to many of you this year. If it's happened to you, let them know what bank gave you a glitch, or you went down to withdraw cash because you want to go buy a car or something you'd saved up for. And they're like, you got to order the cash. We don't have that much. Like, what are you talking about? And it's funny because I hear that from a lot of people. Ninja, not at my bank. They got lots of money. I'm like, well, then go pull out 10 grand. I bet you not. I bet you that person just went up and went to the teller. Hey, if I wanted to pull out 10 grand today, do you have it? Oh, sure, we got it. Okay, I want to pull it out. Oh, I didn't think you were being serious. That's, come on. Most people don't know because they don't have that. You know, I have friends that joke around. They say those are first world problems, and you know what? They're not wealthy. A lot of people turn to mocking as a form of comfort rather than like, oh, hey, this is serious. I should do something about it now. And then while everyone else is freaking out, I'm going to go crush it. It's like when XRP was locked out on all those exchanges around the world, the price spiked, and I just went, doop, 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 got on my Trezor, swapped it over to another exchange in another part of the world because I had, I don't know, 20 exchanges, it seemed like, and made a killing, sold it. And then I bought it all back when it crashed down because it was a liquidity crisis. But most people don't know that. They only look at the price of the asset. Look, what I think people need to focus on right now is have a plan on how to make a ton of money during this. If you want to plan on how to buy real estate super cheap in a way that most people don't know how to do, and if you got training, it would cost you $2,000, $3,000, $4,000, maybe even $40,000, $50,000 in training. I'm not joking. I'm going to teach you about tax liens and tax foreclosure auctions. And the tax foreclosure auctions, yeah, you're going to be spending about half the price as you would at an actual bank foreclosure auction. I know most people have no concept of this, and I want to teach you. If you want super cheap down below, I want to say it's like 85 or 90% off right now. And that price is going up in a little bit less than a week. Or as let's put it this way, if we sell enough of them, it's going up because this one's no joke. One deal can pay for that course. All right, with that being said, keep an eye on these banks because banks are starting to fail again. I think bank failure season kicks off in full blast around February. Ooh, yeah. Hey, that's going to be a good prediction. February of 2025, bank failures start. We got to let the president, settle in before they start really knocking the economy down. Hope you got something out of this. The Economic Ninja is out.